So what are California tax deed surplus overages? Well, you've come to the right place, my friend, because I probably am the preeminent expert in overages, and I'm just going to pull back the kimono and share it all with you. So what California tax deed surplus overages are is money left over when a property is sold because they didn't pay their real estate taxes. So if you don't pay your real estate taxes for 3 to 4 years, they're going to sell your house to raise the money to get those taxes because they need the tax money. They got to pay the firefighters, they got to fill the potholes, they got to pay the mayor, got to pay for the county government. These are all local taxes where that local government can't print money like the federal government can. And they basically have a balanced budget where they say, hey, here's the tax revenue that's going to come in from real estate taxes that are a majority of their tax revenue from whatever little things they collect. And here's what we're spending, on the road maintenance crew, on the mayor, on the county employees, the sheriff, all that stuff. So they need to balance their budget. So when people don't pay, they take it deadly seriously. And in most places, you can go for 3 to 4 years. But if you've gone that far without paying your taxes, they're going to sell your property right out from under you and throw you out of your house. So what happens though at those sales is that the houses usually sell for a lot more than those 3 or 4 years worth of taxes, which makes sense if you think about it because taxes are typically a little under 2% of the home value per year. So if you had, say in California, you have a $500,000 house, which would be kind of modest for California, but say you had that $500,000 house, it's probably going to have about a $10,000 a year tax bill. And if you don't pay for 3 or 4 years, you're behind $30,000 to $40,000. And plus you're going to have interest and penalties, which are very high. And let's say we just double the amount due. So you now owe $100,000 in penalties and interest and all that stuff. So it's a $500,000 house. When that house is offered at a public auction, which is what happens, it's a public auction where anybody can go and bid on that house. It's probably going to sell for anywhere from 70 to 80% of its as-is value. So it's going to take into account condition. But let's just take our $500,000 house and let's assume that it's been run down because if someone isn't paying their real estate taxes, they're probably not maintaining it either. So let's say that it needs $100,000 in repairs. Probably someone at that sale is going to pay 70% of what the house is worth minus repair cost. This is a very conservative estimate. They probably pay a little more, but just for sake of discussion. So 70% of a $500,000 house is $350,000 that they'd pay for it, but they've got $100,000 worth of repairs. So they say, all right, I'll pay $250,000. So if I get this house for $250,000, it's a great deal. So the bidders will compete. It'll sell for at least $250,000, maybe even more, but at least $250,000. And let's look at the math. Homeowner owes $100,000 in taxes, right? The house sells for $250,000. There's a gap. Sells for $250,000. They owe $100,000 on taxes. That means there's $150,000 that's left over. That is the excess funds or overages money. That's what that is. It's the difference between what the property sells for at the auction versus the amount of taxes that are due. Because what the government does, it takes its tax money, including interest and penalties and the cost of the sale and all that, so it sweeps the $100,000 off the table. But then there's $150,000 sitting there that's available for the former owner to claim. This is the law of the land. The U.S. Supreme Court, in a case called Tyler versus Hennepin County, said that that money has to be available for the former owner to claim. And not forever, just for a certain amount of time. Most places, it's about 3 years. After that, the government just keeps the money and doesn't give it back. So they have to make that money available. And in California, that money, they have lists of it. If you go to the agency that does the tax foreclosures in your county, they'll have a list of the results of sale, what money is left over. But here's the catch, and here's the sort of Debbie Downer of this whole thing. California is a terrible place to do this business. So if you're thinking this as a business, like I do the overages business across the country, where I help people get money that's left over from these sales in exchange for a percentage, if that's what you want to do, this is not the place to do it in. There are other states to do it in, but California is not a good state to do it in. And why is that? It's not a good place because in California, they make the entrepreneur, who's the finder of the money, give a disclosure to the homeowner that says, hey, you don't need me to help you do this. here's where the money is. You can get it yourself for free. Just go apply for it. So to me, that's not an environment that I'm going to go into. I don't want to compete with that where I have to give them a disclosure that they sign off on, because I figure I'm going to lose too many prospective clients. So I'm going to be like, oh, I'll just go get it myself. Thank you so much for giving me the information. And you can't run a business as a public information service. And that's the way California works. So I don't think that's a fruitful place to pursue this business. There are plenty of other states that you can pursue it in. And we have plenty of people from California that do this. They just pick up the phone and call people and say, hey, you're owed some money. You're eligible to claim it. Would you like my help? And they don't tell them where the money is. They just offer the help of the expertise at knowing where the money is, the expertise at going and getting it, and then they make a percentage, and it's a great business. Want to know more about that business? Just click on the link below to my intro to the Overages business. You can see that. I did probably 15 or 20 minute free video on YouTube where I describe the whole business. But back to you and what you're asking about the California excess funds and overages. So the money is there. That's 100% for sure. California is not a good place to do it, but if you're a person that lost a property at tax sale, then go to your local taxing authority, the ones that did the foreclosure, and see if there's any money left over. If there is, go and apply for it. It has its complications, but you can work through it. Just work through it and go get your money. Most people have no idea there's any money. The stat that I've been able to find that is actually statewide was a stat from the state of Maryland, where they showed that 72% of the people never claim the money. It just forfeits to the state. And that made sense to me. Based on what I see around the country, I think that's kind of par for the course, where like 7 out of 10 people have no idea there's any money left over. 7 out of 10 people don't ever pursue it, and that's, they just lose the money. And so as an entrepreneur in this business, what I do is I get those lists, I find the people, I get them signed up, and I go and provide the service and get the money for them. It's a really good business, a business I really enjoy because I'm helping people and making great money. And without me, like 7 out of 10 chance they're not getting the money. So if you like that as a business, then I would definitely check out my YouTube video. It's, again, 15 to 20 minutes, Intro to Overages Business. It's going to talk about that. And I promise you, I'm assuming you're probably from California if you're asking this question. It's a great business, but don't do it in California. It's a mistake. Just do it in other states. If you're an entrepreneurial person, you can make a great business out of this. So if you have any questions, follow up, put them down below. I can't promise I'll get to them. I'm busy like everybody, so I do what I can, but that's not a great chance I'll be able to reply, but I might. If I see it, I'll get to it. Also, if you put questions down there, my staff and I do look at the questions from time to time. We gather them together and we do follow-up videos. So again, put your questions down below and I'll see what I can do. But most importantly, the step you can really do right now, just click on the video, learn more about overages, and you can take it from there. So thanks for being here. It's been great being here with you today. Hope this was helpful to you, and I will see you next time.